Well, we've made it to the final week of November. It is Thanksgiving week, and I want to start by saying thank you. Thank you not only for working with us this year, if you bought or sold a property or leased a property, but thank you for watching these videos. I do it for you. I want to keep you informed on the market. So this week, I'm calling it high supply. A lot of headlines this week. Number of houses for sale in Austin now reaches its highest level since 2022. That should not really come as a shock. I've been sharing this data all year, but they're reporting on it as of October. If we look at this one, which breaks it, kind of looks at a few of the suburbs, 43% more homes on the market in Pflugerville and Hutto than the previous year. Again, these are two suburbs on the east and northeast side. And just saying, compared to last year, we're seeing a lot more inventory sitting on the market. But it's not just residential. We're also seeing it in commercial. And so downtown commercial lease space is at a historic 24% vacancy. Just to put that into context, if you just, drive by downtown and look at all those office buildings, what they're saying is, 1 out of every 4 square feet isn't leased. And so what's happening is we built a lot of supply, just like we've talked about in all the categories, not just apartments and homes and condos, but we've built a lot of office towers. Well, the brand shiny new ones are probably attracting tenants. They're moving from maybe an older stock office over to a newer office. So that's some of it. And now that older office has to go find a new tenant. There's some of that. And then there's just simply too much supply. There's not enough companies right now bringing workers back to downtown. As you've heard about, a lot of companies are trying to kind of shrink their footprint because not everybody's coming into the office anymore 5 days a week. So, there's going to be some workload to work through when it comes to downtown office space. So what is all this doing to the housing market right now? And again, I've shared this a lot, but basically we're pretty much in a buyer's market. We have a lot of supply, as you can see here on the left-hand side. We average about 8,900 homes for sale. We're still sitting around over 13,000 homes for sale. And demand is below normal, although just a tad bit above last year, which is good in terms of October. We'll see what November's data looks like as we get into December in the coming weeks. We should get some November data coming in. In terms of appreciation, here's kind of what it's looked like over the last 10-year cycle. Obviously, kind of steady, going up 3 to 5%, then 9% in 2020, then 31%, another 11%. It was just crazy unsustainable. Since then, we've given back. I know this only shows maybe 15%. I'd say in some categories, we've seen depreciation off peak COVID, maybe around 25% for single family homes. Condos might be getting hit a little harder. But at the last, this chart down here, I'm just going to point out a few things. So November 24 through October 25. So that 12 months versus November 23 to October 24. So it's not 1 month over 1 month. It's 12 months over 12 months. So it kind of aggregates a lot of data. So if we look at appreciation, we're down over the last 12 months about 1.1%. It feels way worse, but we're only down as a market, as an aggregate, about 1.1%. The year before, we had dropped like 3%. So that had dropped farther. Median days on market obviously are higher. And median sales price is down about $5,000 over that 12 months before. But again, the pain sometimes feels worse than the math. But when you're an individual seller selling an individual home, it's going to feel a lot worse because you're really looking at your bank statement and the impact that lowering prices is having on it. So, but just know as a market, we're kind of hanging in there. It's softening, but it's not crashing. As we look at active versus sold listings, this is in real time. As of November 24, we are sitting at, now we're under 13,000. So you can see the numbers are really coming down, but we're sitting at 12,800 homes for sale. So far in November, we've closed 1,300. Now it'll go up, but we're going to close fewer. And also this week is a shorter week. Title companies are generally only open for 3 days this week, and then they'll be closed Thursday and Friday. And so we're not going to have a lot of closed sales. Some things trying to close this week may end up getting bumped to December. And so it tends to shrink sales in November, and it tends to boost sales in December because of that factor. So pay attention to that. But as of last month, we closed about 2,400 Single family homes, I expect we'll see a lower number as we wrap up November. All right, finally, let's talk about mortgage rates. So rates are hanging in there. They're kind of going sideways around this 6.25 to maybe 6.4%. If you look at this little blue bar under here, that's over the 12 months. Are we more on the high end, which was closer to 7.26%, or on the low end, which got down to 6.13%? We're closer to the low end, at least the bottom quarter of mortgage rates for the last 12 months. Same on the 15, pretty close to the historic low, or not historic, but last 12 months low on the FHA and VA loans. So rates are okay. They're hanging in there. Last thing I'm going to show you. This is from September 1 to now. This is the average 30-year fixed rate mortgage rate. This higher number is 6.4%. This bar is 6.2%. And for the most part, despite all the tariffs and the Fed stories and inflation and deflation and jobs and all of it, we're kind of hanging in there between 6.2 and 6.4%. So the good news is rates aren't skyrocketing back up to 7%. I don't want to see that. But if we can hang them out here, I think we are shaping up for a little better buyer activity in the spring than we normally have. So pay attention to that. Anyways, if you're a seller, have a happy Thanksgiving. Please have a happy Thanksgiving. If you're a buyer, have a happy Thanksgiving. It's Thanksgiving week, no stress. So anyways, you know what to do. If you're a seller, we got to work on price and condition, attract those buyers. If you're a buyer, you got plenty of supply. You've got pretty good mortgage rates that we've seen over the last 12 months. So if you want to buy or sell or invest or finance in Austin, you know who to reach out to. We'd love to chat with you. And of course, we'd love to have you follow our YouTube channel. You can click that subscribe button at Ryan Kelly Group. Until then, please go have a happy Thanksgiving, and I will talk to you in December. Thanks.